Good morning, welcome to the ADP Securities Markets Update. Beginning with Asian session today, there were two economic releases from New Zealand and Japan, which had a muted impact on the FX market, as all eyes are headed toward the US today, as ADP Non-Farm Employment Change, the GDP and the FOMC decision will be released later today. In New Zealand, building permits posted the highest reading in 3 months, rising by 3.5% in June after declining by 4.4% in May. In Japan, disappointment figures continues. The industrial production came in shockingly weaker than expected, declining by 3.3% in June, and this is the biggest monthly decline since July of last year, comparing to a rise of 0.7% in May, while it had been anticipated to decline by 1% only. As for the European session today, also we will be focusing on three economic releases from Germany and Spain, which is likely to have a notable but a short-lived impact on the markets. In Germany, the consumer price index is expected to rise by 0.2% in July, comparing to 0.3% in June, while the year-over-year CPI is expected to slow down further to 0.8%, down from 1%. In Spain, the year-over-year CPI is expected also to pick up slightly to 0.2% in July, up from 0.1%, matching the month of May levels. The Spanish flash GDP is also expected to show a positive growth of 0.5% in the second quarter of this year, comparing to a growth of 0.4% in the first quarter, which would be the highest growth rate since February of 2008. The U.S. session today is considered as the key session for the week, as we will be focusing on major economic releases and an announcement by the Fed. First of all, the ADP Non-Farm Employment Change is expected to add 234,000 new jobs in July, comparing to 281,000 in June, which would be the fourth month in a row to add more than 200,000 in new jobs. The key figure remains in the advanced GDP for the second quarter of this year. The estimates point to a growth rate of 3.1% after the economy shrank by 2.9% in the first quarter. However, we believe that the actual number may come in far away from the expectations and may disappoint or at least come in below 2.9%. Since the beginning of the second quarter, more than 70 to 75% of the economic releases came in either weaker or shockingly weaker and less than expected. While if today's GDP came in with less than 2.9%, this would mean that the U.S. economy is technically in a recession during the first half of the year, which will lead the major banks and the Fed to cut their annual GDP estimates again, while the Federal Reserve annual GDP target will not be achieved. The FOMC decision today also will be released at 18 GMT time. The expectation points to another $10 billion reduction of the asset purchases. However, any disappointment from the GDP may change the Fed policy. We suspect no surprise in this meeting, as there is no press conference today, while the next meeting is likely to come in with a major change, especially if GDP comes in with another disappointing reading today. We will publish our estimate regarding the U.S. GDP later today, so follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis, and our special reports for today's GDP. Thank you for watching and have a good day.